Jesse, the new tax law went into effect on July 4th. What are the big takeaways out of the bill?
I think maybe the biggest is the permanent lower tax rate, or being made permanent, such that from our perspective, that helps a lot for planning forward.
Yep.
Right. So that's a big one. It did raise the standard deduction by $750 for single filers and $1,500 for joint filers.
So $31,500
those of us that aren't itemizing.
Yep.
For those that own a business, fully permanent qualified business income deduction.
Yep.
Those that know that, and that's helpful as well. I know something that you've thought about a lot is the SALT deduction cap being raised. So talk to me a little bit about that.
Yeah, state and local tax deduction. I mean, it was $10,000 and it's raised to $40,000 at least until 2029. That is. And then you get phased out if you make more than $500,000 adjusted gross income. But the really neat thing is, so what I've seen a few times is folks kind of pushing closer to that deduction now from an itemization standpoint. Keep it in mind, $31,500 hurdle, right? Mm-hmm. Well, it used to be a $10,000 state and local tax and then maybe mortgage interest. So like if you were going to get the charity, for example, your hurdle was like from $15,000 all the way up to close to $30,000.
Right.
Now, getting all of your state and local tax deductions, or at least up to $40,000.
Right.
What I'm seeing more and more is folks pushing closer to $25,000, $30,000 on itemized deductions, so they're getting closer. And the reason that's good is actually because of charity. But I know you were interested in the fact that on top of the standard deduction for $31,500, there's a new charitable deduction added to it as well.
Yeah, as you said, for a long time it's been hard to reach itemizing, and so I've been a standard deduction guy for a long time, mm-hmm. and yet I still continue to give to nonprofits or church or whatever, and so those gifts out of, other than the benevolence factor of doing right,
benevolence, others, but not a deduction.
Not a deduction. Now that's available again, capped at $2,000 for joint, but still something of benefit for those of us that are giving, even if we're a standard deduction family.
So to clarify, what that means then is $31,500 standard deduction, but then $2,000 on top of that.
If you're giving $2,000
for charitable,
that's right. Now your deduction's up to $33,500.
So on a standard basis, before it was you really weren't getting anything, but now you're getting up to $2,000 on top of the standard deduction, which is great. What I've seen a lot is folks pushing up against the state and local tax deduction. That is, folks we've seen since July 4th. Mm-hmm. And what happens is you start adding up their property taxes and their state income taxes. All that pushes like $30,000. So they're real close to $31,500. And what's interesting is before you really had to lump your gifts to charity, and you had to use a donor advised fund more often than not to do it to get any real material benefit. And even then you had to give like 3 years of gifts, get up to 50, 70,000. I mean, bigger numbers, right?
Yeah.
Now you're in a structure where, if you're $500, $1,000 away from the standard deduction, plus you've got the $2,000 on top of it from a charity standpoint, you almost really don't necessarily need.
The lumping factor has diminished some because of that SALT expansion, which is a benefit for those that are charitably inclined or maybe not. Right?
It's a benefit to charities too.
Yeah. And the last thing that I'd mention, Chris, is, and we had a couple in just yesterday who had already seen this $6,000 deduction. Just so you know, the notion of no tax on Social Security is rectified by these deduction limits for MAGI or your modified adjusted gross, but there is an available extra $6,000 per person if you meet these modified adjusted gross income thresholds or are below those.
Right.
And then it's diminished by 6% for every $1,000 you earn above those numbers. So
and it's $150,000 modified
married,
adjusted gross for married filing,
or $75,000 for an individual filing.
Right.
And the neat thing there is, those folks already had an additional deduction for having reached 65 of $2,000 for an individual or $36,000 for a married filing jointly. And so the capacity of the total deduction for an individual now, if you meet those thresholds, are $23,750 for an individual or up to $46,700 for a married filing jointly. I think this applies to probably a lot of folks out there And so something to be looking at and planning for.
It is. Now, it's notable that only goes through 2028.
That's something to think about and plan for right now as well. We were talking in the context of a Roth conversion. This can help maybe move some additional dollars right now because of that deduction over the next 3-4 years.
Right.
And so, again, an invitation to take advantage of the current tax law as it's now written. We've got a good understanding of that, and we invite you to take advantage of our knowledge.
And you've got a few years to really make hay on some sort of notable little niche things that may be applicable to your situation.